Good day, fellow investors. Discussing real estate, efficient and non-efficient real estate markets. Interest rates are up, real estate should be down 25%. And I will show you here an example of an efficient housing market, which is Sweden. Interest rates in Sweden, like in Europe and in the US, have been zero, and now those have jumped from 0 to above 2%, like everywhere approximately. However, the housing market in Sweden has fallen 25%. That is insane. And the bigger insanity here is that it hasn't happened in Europe and in the US. Also, in the Netherlands, interest rates and mortgage costs have gone up. The real estate market just slowly slowed down, but here it should have crashed 25%. Why didn't it? We'll discuss in a second. Mortgage costs in the US have gone up insanely from 3% just a year ago to 6%. So if you want to buy, I don't know, a 500K house, before it would cost you 2,000 per month, now it would cost you 3,000 per month. So home prices should have been 33% down at least, but just a small blip here, not even recognizable on the chart. And if we look at the house affordability index, look at it, it was extremely high, and now it is probably even lower than this. It is back to 2006, 2007, or the 1980s. And these times of great affordability have passed, especially after the financial crisis. So why aren't all markets down? Because everyone is expecting lower interest rates based on the presentation of the central banks, the Fed, that we will have from 2023 inflation will go away and lower interest rate will come, and therefore home prices, financial asset prices, stocks, everything will remain high. Because if you just look at the expectations, already next year we'll start seeing lower interest rates, effective interest rates, and then a stabilization at very low rates. And if there is a crisis, there will always be the Fed that will print money and the ECB to print more money. And this is very interesting because we have an efficient market in Sweden where people are just looking at the facts, and therefore home prices, real estate prices have adjusted. And we have here where it's still based on a hope that the Fed and the ECB will save our real estate behinds. We will see what will happen, but from an investing perspective, of course, it's a big difference if you're buying a home or a real estate as an investment. As an investment, it looks like it is a risky play now, especially if the markets adjust to the realities there. If the reality is higher inflation, higher interest rates for longer, there might be issues also in the real estate markets, depending on the affordability. But from the current situation, real estate doesn't look that great. Of course, you never know. If the Fed really lowers interest rates, there might be another bonanza and prices can jump up another 20% this year, and you might miss your opportunity to buy a home. So always weigh the risk and reward in relation to your life if you're looking for a home, or in relation to other opportunities, risk and reward if you're looking for an investment. Especially if you look for an investment, think about structuring that deal properly so that whatever happens, you're in a win-win situation. That is real estate investing. Thanks for watching. Smash that like button. See you in the next video.